Hey, we're back. Part 2.
Here we are, part 2 on Ed's favorite subject. I made him wait months to get to it, the monetary system. It's been driving him crazy for years. We're going to talk solely this time. Last time we tried to give you some perspective. We tried to put a context together to have this discussion. But now I'm going to ask you some direct questions because I know this is your bailiwick. How do you think AI-generated material on the internet, whether it's coming out when you ask a question about finance, stocks, bonds, whatever it is, gold, or it's on the YouTube and the algorithms are pushing things out there. How could this AI-generated material, in your opinion, influence global financial systems and the traditional economic model?
Well, I think from the market perspective, which we're still at this point, you're right. The algorithm knows how you think, knows how I think. It's going to give you the stuff that you're going to bother to click on because that's what makes the world go round.
Because I lost a ton of money in 2008 when I first started my career. So it must know from the questions that I asked that I'm worried about another 2008. So it's feeding me everything that's going to make me fearful.
Now, add on top of that there are certainly parties out there who stand to win for whatever the case may be, whether they're looking to get rid of their product or manipulate world markets or just playing both sides on the fluctuations of the market. We have the possibility of great market manipulation to take place. So where we are right now is a redefined market from what there was years ago. You figured years ago you had to have a stock certificate. The stock certificate would actually be transacted and then you had it. Now, all of a sudden, those stock certificates have been computerized. And, like if we take Vanguard, for instance, holds stock, and that's just one, BlackRock is another, holds stock for, millions of individuals. They have them there, or so they say. And then we buy and sell them amongst maybe their own stock, and they're just making a transaction fee on the stuff they're still holding. But the market is not the same, and it can move very quickly. We can have pressures like you talk about. You've been identified perhaps as being cautious in the market. Other people are bullish. They are going to be fed as a result of the algorithm, whatever they're looking for. Here's where it gets interesting is that when we talk about swaying the opinion of the internet with a certain amount of hits, or for that matter, changing world opinion through publicity through the internet, through perhaps even virtual financial propaganda, or in the case of, you've got dollar reserve currency versus the BRICS as the two major players right now. Each has a lot at risk as to whether or not they are the winners in this picture, so to speak, between who's going to be the reserve currency. One claiming to have a gold-backed currency, the other one using one that's been pure fiat and has demonstrated, there's no doubt about it, there's unprecedented positive living conditions and prosperity that unparalleled in the world. So the system, certainly from a standpoint of a success rate, can demonstrate that it's done pretty well. But
depending on what year you started your investing or your retirement.
Correct.
Because timing does matter in this, which is interesting.
So we're now seeing a situation to where AI has the ability, through the volume of trades, the speeds of trades, and the ability to influence investors to where the market no longer is totally based upon the normal old view of supply and demand, because we don't even necessarily take ownership of any of it. All we get is a ledger entry that you bought it, and you see a corresponding.
A lot of faith in this.
A lot of faith in this.
For what is a lot of money.
Exactly.
So I should start by saying, again, if you didn't join us for the first episode, you might want to go back so you can get a little bit of a context to what we're talking about. And we are not financial advisors, certified financial planners. We are not giving you economic advice. We are just two guys like you might see in the old days. If you were walking down the street, sitting on a street corner, we read the newspaper this morning and we're having a conversation about it. Yes, I did. If you look me up, I did write a book about financial security almost 20 years ago now. But that book was written for children. it was really written to fill a gap in the educational system because we go to school and no one teaches us even how to have a bank account. They don't teach us what stocks are. We learn this as we go along, which again, why I think there's a lot of fear, trepidation out there, because we jump into this and it's pretty funny. If you go to work for an employer that has a 401k program and they have matching money, you'll stick your money in there. You'll probably go to whoever it is. You'll get some quick advice from a real certified financial planner. Maybe not. Maybe you do it. You're a DIY kind of person. You're doing it on your own. But here's the funny thing when it comes to money for me. I probably, and I'll use myself as there, I've probably done more research on my next vacation hotel than I've done sometimes on monetary policy and where I have my money invested. So, I mean, and I think a lot of us are guilty of something like this. So given that I think that represents most of us out there, I know you've looked at this a lot more deeply. It does give rise, because of the faith we put into the stock market, into the currency, it does give a really ample place for manipulation out there, in my opinion.
Well, and I think that as you look at lifespans of currencies and fiat currencies, which if you go back to our first segment here, we go into a description between fiat currency or not being a fiat currency, and now it's becoming more and more evident to people that the purchasing power of what they had been holding their wealth in as a store of wealth in dollars is becoming challenged. I know I just bought a loaf of bread for $4.60 that I can remember as a kid was 15 cents. So obviously there's been something that's been going on.
And there's less bread in it now.
So yeah, I actually had a big hole in the center.
More chemical in the stuff now.
But more and more people are starting to scratch their head a little bit and they're saying, hey, wait a minute, this is not a good thing. What else can we have? So there is also, while we've watched the challenge to the dollar as the reserve currency, BRICS now is attempting to become the reserve currency, and we are seeing a shift here in terms of like maybe there's another alternative, which probably 20 years ago wouldn't have even been considered because the dollar was unchallenged. Certainly after the advent of the petrodollar, which came after the closing of the gold window. So as a result, currently, as people are becoming more and more concerned, we see Bitcoin, for instance, people have looked at that as an opportunity, and I think the first players obviously
people are all looking for safety though. Right?
Preservation of wealth. That's what money is. Is that you can have something that you can hold that was from yesterday's production, and you can use it in the future.
But here's the thing that boggles my mind, and I'm not suggesting that the world financial system is going to collapse. How the hell would I know? But here's kind of one of the things that boggles my mind about this when I think about it. All right, we've talked about this in a previous episode. The economist Keynes predicted in 2030 we'd have to change the entire financial system because of the advent of technology. Right? He came and he literally said 100 years from now, and he wrote that in 1920. So we're there, or what, 1930? We're there, right? Mm-hmm. We're at that point where we're 100 years, and damn it does kind of look like it's happening. So here's kind of my question about AI. If AI, and this is also what confuses me currently about the market too, which is why I wonder if there is a manipulation going on in this thing. If the AI is going to produce intelligent robots and intelligent systems that will increase productivity but use less humans to do so, there's an increase in domestic product or domestic production. But, and you mentioned Davos in the course of these discussions and how you weren't invited. Davos, I want to say, this was before COVID. I can't remember if it was, I think it was 2018. At the Davos meeting, they talked about automating away at least 40% of the jobs. Now, I think that number is much higher now because that was when AI was just, AI, there was no ChatGPT.
LLM, large language models.
Yeah, but there was robotics coming, and I think they were thinking about automation from that standpoint. It's got to be like, at the meeting, it's whether they're going to publish it or not, it's got to be like 60, 70%, right? Well, if 60 or 70% of us don't have gainful employment, how are we part of the system?
Well, and to go back to the
And
prediction
talk
of
about
Keynes.
inflation.
Well, and you talk about Keynes and the 100-year prediction. Was it a prediction or was it a plan? That's another question.
I'm not going there.
So
You're not sucking me down that rabbit hole. You
no,
got me into this.
So let's go back to where we are now and what the next generation of monetary units could look like. And certainly one of the Project Agora, which is
Explain what that is.
All right, Project Agora, which is actually just going to come online, probably in 2026, is something that would replace the Bank of International Settlements. And again, the source of information that we get.
What does the Bank of Settlements do?
International Settlements. So what happens is that we have a lot of countries who have sovereign currencies, albeit that in most cases they are fiat currencies, but each one of them have their own, and you'll have, they quote, Banana Republic, if you wish, where the inflation rate is 1,000% or something like that. Well, that's where all this stuff gets exchanged out, and it makes it.
That's where it's settled out.
Where they
say your dollars are only worth this compared to the U.S. dollar.
Correct,
because we're the reserve currency,
and it's based on an exchange rate. I mean, if the country that is printing, pesos, for instance, just no inference against pesos, but just at a rate that doesn't match anything to do with what they're contributing, that's going to be worth less and less, and you're going to have the inflation.
So this is the group that decides what your national currency is actually worth.
That's where the settlement actually comes out, and that's based on buyers and sellers. But the concept,
And what is this new thing called?
It's Project Agora. And
whose project is this?
Well, there's a number of central banks who are involved in it, and if you go online and you look it up under Project Agora, you'll see one of the major players is the Bank of England. That's the first one that's on the list, as well as the Federal Reserve Bank of New York is there, and the European banks are there. There's a whole bunch of them, and then we've got other players as well, but. What it is it becomes to change that to where things become tokenized, to where the clearing of deposits and transactions would be able to happen instantaneously. And again, I'll be the first to say that I'm no better than my sources, which in today is very, very difficult to determine whether they're AI or not.
Trying to find the truth.
But I did do the research to find out what I could about it, and what it basically does is it tokenizes. And makes it to where.
When you say tokenized, what would that mean?
Well, so tokenized means that it's something other than the monetary unit that we're talking about. The exchange rates may change, but if you put your dollars in, you're going to get X number of tokens if that's the case, and then they just set there, and that.
So they're feeding right into the AI monster.
Right. So the AI monster now is controlling everything, and there's no actual international settlements because. You put it in there and it's already been put into a uniform monetary unit, and the exchange is made. And if I'm found to be wrong, shame on me. That's why we're two guys drinking beer at the bar instead. But I think that when we look at it, and certainly if you go online, and I encourage you to do the research on this, tokenization means that we're no longer talking in a monetary unit that represents a particular political philosophy or, for that matter, economic might. And it's now become something that's basically a banking item, if you wish, and to facilitate the change quickly as it's posed to be. And that's all things. I think if we look at one of the areas where the dollar has become particularly challenged, is that it started to become conditional. And we've seen that also in Canada with the truckers during COVID, where they were debanked. So if you're having a store of wealth, assuming that it is a store of wealth, then I think it's important to recognize that we have dollars and Canadian dollars and British pounds are all notes. They are not sovereign currency, so to speak. They're notes. They're IOUs that the bank said, yeah, we're going to make it good for you. And so it's actually conditional at that point. And then the banks have, established, certain conditions based upon under governmental regulation. And at the time, Prime Minister Trudeau decided that, they were going to be debanked because they were protesting over COVID policy. And we started to see examples on a personal sense of conditional banking to where, we know you got the money, but you still need to use us to be able to get the money. You got the money in our bank and you can't use it because you're doing something that we think is naughty. That's not a store of wealth. That is a conditional allowance as to whether or not you're going to be able to have this.
Let's tie in the value of your currency to your political belief.
Correct.
Sure. And that would be anti to freedom in my world.
It would be anti many things. What it basically means is that what's yours is yours until I say it isn't yours. And then in which case, is that a store of wealth? Now, if you look at it from the standpoint of, the seizure of all of the monetary assets, Russian assets by the United States government as a result of the Ukraine. And I'm not going to get into the rights, wrongs, or any of it, but the fact of the matter is that those stores of wealth were suddenly made unavailable based upon political activity. Is it a deterrent? Absolutely. But looking forward, if you have the choice of where you're going to put that store of wealth, are you going to put it there when you know it can be conditional? You're going to say no. Where does this get dangerous as we start to look at a centralized clearinghouse? And we've talked a lot about CBDCs, which is central bank digital currencies. I encourage you to look that up. That idea is that everything would become digital. There wouldn't be any paper certificates. All transactions would be done electronically. And then it's even easier then. And this is where we start to get into, the, twilight zone, if you will, to where now AI would be able to facilitate whether or not the conditional access to the funds that you have stored in the system are pursuant to policy or whatever. It becomes a conditional form. As soon as we start to end up with situations where you are no longer in control of your resources, whether it be cash, whether it be dollars, gold, whatever, you're dependent upon whoever is the fiduciary holding that asset for you, that they're going to deliver it to you based upon the promise made. But what happens when we have new forms of currency that come with conditions? And we talked in an earlier podcast about when you sign on the dotted line, what rights do you give away? For instance, I just got a new internet provider. I had to sign on the dotted line on the bottom of a bunch of pages. I use Google, you use Apple, you've got changes to user agreement. I'm sure every one of you go out there and read all of those things. Very easy to just slip into there that this may be conditional based upon governmental rule or policy change, and in which case, if the policy change is established by the banking institution, check your credit card agreements. You find all of a sudden the terms of the agreement are changed and things become conditional. AI provides the possibility to be the police department to ensure that those policies are enforced. That's where we're getting into a very, very dangerous area. The idea of tokenization in an international sense, if banks in each country are all using a central system and that clearinghouse takes control, he who controls the money controls the outcomes. We're talking about one central agency. Ladies and gentlemen, across the world, one group that would have control of all of the financial resources and transactions in the Western world would have that kind of power with the ability to decide how conditionally it would be used. And there's no way that they can say ever that they won't ever do it. Because take a look at the creep that we have seen everywhere else. AI is going to be the policeman. AI is the one who determines whether or not, in an instant, whether or not the purchase you make is or isn't approved, whether or not your political affiliation, whether or not your religious affiliation, anything that it decides is no longer acceptable would be able to manipulate and control access to your assets.
All right, so we're sitting at all-time highs now. I want to play a little conspiracy theory with you here because you're in a great spot. Got you all worked up. Because here's one of the here I want to not only talk about this, but I want to mentally in a mental model put this to the test in my mind this year. All right, it's February 2026, which is a great time. I believe the Dow was all-time high.
50,000.
I believe gold is an all-time high.
4,900 right now. No, it was over 5,000 a couple weeks ago, but
Okay.
it's still very high.
Bitcoin was, and it halved.
Yes,
So weird stuff is kind of going on.
very
right?
fast too.
Right? We got the Japan thing. I think it's next week because of they seem to their currency is on the brink of disaster.
Free fall. Yeah.
Okay. By all means, right now, with the amount of fear, the stock market should be headed down. Right? I think there's people predicting this. I said earlier, I think Vanguard moving people to bonds. All right. But the truth is, nobody can ever really predict the market unless they can, unless AI can manipulate. I think that's your argument here. Here's an interesting thing that I want to follow through the year. All right. I have no idea. All right. In case anybody thinks I have some insight, I am just thinking in the most evilly manipulated way I can think. Okay, which creates conspiracy theory. So let me say this is my conspiracy theory that I'm going to watch this year.
This is not Ed's conspiracy theory.
Now there's Will's conspiracy theory. We've pushed everything up to an all-time high again. I saw this in the .com era. All right, and I remember sitting near the Jersey Shore with somebody I knew who knew things about finance. He had been in the financial sector. That was his degrees. And I remember watching come across the ticker, eBay was trading at the time for $375. And I looked at him and I go, I really don't understand this stuff at all. And this was before the year 2000, obviously, because of the .com era. I go, how the hell can a yard sale be worth $347 or $375 a share? I mean, it's a yard sale. It doesn't produce anything. And it was higher than everything else. And it all crashed. And people lost a small fortune at that time because a lot of people were leveraged. In other words, and when they say leverage, that means they borrowed money to buy the stock because the interest rate on what they borrowed was lower than the returns had been. Mm-hmm. But then, and this is what happened in the Great Depression, if I'm correct. Yes. When the stocks fell, they couldn't pay back their loans. All right, and then they started in the Great Depression. They started jumping out of windows. It wasn't the average investor who lost everything. I mean, people did lose everything because of the Great Depression, but this was started by people speculative borrowing against this. All right, I think we've gotten smarter since then. This is all part of my conspiracy theory. We're up. Gold up and down, Bitcoin up and down, stock market, it took a dump and then it flew back up. It keeps going up right now. We're looking at some of the biggest IPOs since the .com era that are predicted to come out this year. All right, the most famous of which, and these are $1 trillion IPO speculative, SpaceX, right? I think they're talking about like April for this IPO to come out, and that's called an initial public offering. SpaceX right now is privately held, unlike Tesla. If you were an initial investor or an angel investor, the IPO comes out and you sell that SpaceX for the first time publicly. And I'm not saying SpaceX isn't a good company. I'm not saying that the raw materials in space that are out there aren't worth going to retrieve. I don't know how much money is made in going to Mars, but there's definitely money on that moon in those craters. So I get how space can be lucrative. I don't know whether it's worth $1 trillion or not. I'm not an expert. But here's my conspiracy on this. They'll sell these IPOs when the last of the big boys, or the $1 trillion ones, go. All right? If the market crashes 6 months later, I know something was up. And why am I picking 6 months? If I'm one of the angel investors, and the IPO comes out on April 1st. I have April, May, June, July, August, September. I have to hold it by law until that 6-month period is over. If it all crashes after the 6 months, to me, that's gonna make my conspiracy theory come true.
Well, for once, I'm going to blow a hole in your theory.
All right, good. Hold on one second, though.
All right.
If it happens then, and here's the great cover-up, it was the midterms that caused the market to crash.
Well, okay, that's that. You know, I mean, and that
Had nothing to do with the IPOs, had nothing to do with AI, had nothing to do with manipulation of currency. It's just the natural order of things. And oh, by the way, things crash around midterms.
So, and that could all be very much possible. But let's just look at market forces here first of all, and because if you've got trillion,
and we are not experts. You can see
not.
This is the two-guy thing. Just two guys thinking they're smart.
So what happens? What happens? $1 trillion offerings. Where's that capital come from? Individuals who have stocks and other stocks are going to start to sell those stocks. So we can start a cascade here, because if you dump too much new additional investment opportunity into the marketplace, the capital that's there to fund them has to come from somewhere, and there's going to begin a sell-off of people who have other stocks, whether it be Exxon or whatever. They decide, I'm going to take my win there and I'm going to take and put that out. Now remember, we talked about how AI can start to do a cascading effect. So everybody decides that they want to go into the new IPO, and let's say there's more than one IPO, and let's say it's $2 trillion, whatever. It's phenomenal numbers. There has to be capital that comes from somewhere, unless they're going to create the money out of thin air. And that is going to result in a reaction in terms of the stocks that are currently there, because that capital is getting redirected. At the same time, you talk about the 6-month time. All of those individuals who bought the IPO that have to sit on them for 6 months, their first opportunity to sell them is going to be after the 6 month. And lo and behold, what's going to happen? There's a bunch of them who are jammed up because they need their capital for whatever the case may be. And that's going to get dumped into a market as a market sell too. Let's remember how AI works. AI was told sell. It's going to sell. If there's no buyer, it's going to drop the price. You're going to end up with dramatic price swings, because it makes its decision over and over again. It's not reasoning, it has a command. Starts with the sell to get the capital for the new IPO. It freezes that capital for that period of time, and then all of that capital is going to be able to be redeemed, which would generally, unless we're talking unbelievable earnings, are going to end up to where, like, the first people who jump out of that, they may get that first number. But then if everybody says, hey, you know what, I'm going to take the money and run, that's going to go down in a heartbeat. Just like we watched with silver over the last week. These types of market things, when you start to end up with that kind of instability due to huge capital requests and calls, it's going to rock the market regardless. And, unless there's some place, which it's very possible with a fiat monetary system, that, the money's going to get created to keep it up. Undoubtedly, there's been a lot of money created to make the stock market up to $50,000. But you're going to be looking at a diversion of capital resources from investments in one place to go someplace else.
Unless there's creation of money.
Exactly.
Isn't there creation of money going on right now by the Fed?
Absolutely.
Well, that feeds like conspiracy theory, doesn't it?
Well, so, and I think that we have to take a look, and a lot of people are making comments about the fact that Janet Yellen, who had been on the Fed, then suddenly becomes in the Treasury, and they're questioning as to whether or not where the allegiances were. Excuse me, if you were the chairman of the Federal Reserve Bank, of course you're going to still remember that your friends there are looking to have higher interest rates. Well, they don't care as to whether or not it should be reduced, because it's going to be easier for the government, especially when you look at politics and the people who are concerned.
Yeah, but all I'm going to say is, and again, I am not an expert in this. I just like, and I love a good conspiracy theory.
Yes.
Isn't Japan a wonderful one? And I mean, Japan's been at this for like 2 decades.
Yeah.
But isn't this a wonderful, wonderful excuse to print more money, to pump up that thing before the IPOs? I mean, the timing on this is magnificently done for me.
Let's go back to Weimar Republic.
I'm right if something happens right before the midterms.
Well,
they're going to blame the midterms, they're not going to blame AI.
Well,
because here's what I'm thinking. They figured out the margin calls and what went wrong in the Great Depression. Mm-hmm. They had the kind of things happen throughout the 80s and 90s. They know with the .com you can count on FOMO, fear of missing out. That's where the capital comes. Mm-hmm. I need to get in on this thing before, because I'm going to be, so in all seriousness, when I do go to get my hair cut and someone's talking to me about SpaceX for the first, and I've been studying SpaceX for years, and I know how hard the space industry is because I have a degree. I actually have a degree in commercial space operations, and the space industry is one of the toughest places to be
out
invested.
there, Will.
There's toughest places to be invested. All right, that is not for the weak at heart. The space industry, because number one, it's still emergent. I mean, I have more faith in Bitcoin somewhat than I do in the next space. But, these satellites are out there. Japan is a great excuse to pump new money, unbacked money that you're afraid of into the system. Right before this, it should crash, but that's that 6-month period. Boy, wouldn't that be interesting?
But here's the question, and let's go back to the Weimar Republic from the first segment, which is why you all have to go back and check that. The Weimar Republic, the massive inflation that created to where you needed a wheelbarrow of money for a loaf of bread.
And this is Germany before the Nazis came about.
That's right. So this was right after World War I, was that at the Treaty of Versailles, they were given extreme war reparations to repay. And what they did, because the reparations were denominated in Deutschmarks, was they inflated the currency to where, okay, yeah, here's your money. Unfortunately, it bankrupted all of the people, so it wasn't like they didn't get destroyed in the process, because the savers who had saved their money, I mean, the Deutschmark originally had been almost on parity with the U.S. dollar at the beginning of World War I, and by the early 1920s, it took $1 million or 1 million marks to be able to get a loaf of bread. We're looking at right now where the whole Western economy, which is a debt economy, and we talked earlier about hundreds of trillions of dollars of debt. If you look at all of the obligations and everything that we have, the only way out is to either print it out or just have the debt discharged. And then certainly, if anybody would love to send a comment, if anybody can tell me who this $100 million is owed to, or $100 trillion is owed to, who quadrillion, I don't care whatever the number is, it's so unbelievable anyway. Who owns the debt? Who does own it? We're told that, they.
Well, I guess Japan owns a big piece of it.
And
I guess I own some because I have treasury bonds.
Well, that's right. So, and what's it worth? It's not worth anything if there's a default. But
isn't that's what we're based on? The United States has never defaulted.
That's correct. But we have printed a lot of money to cover the debt. And, I think that...
Well, isn't that a secret way of getting rid of the debt?
Well, it's the easy
way
out.
If you go one step too far, you're going to need a wheelbarrow full of cash, right?
Well, and I think that's why you're looking at, other governments who are trying to come up with some other solution to holding U.S. dollars as their means of storing wealth, which is, again, one of the major portions of a fungible asset. Is that they're trying to come up with something else that isn't conditional. And the West is going to attempt to come up with something to say, hey, you know what? We realize the dollar has problems. We're going to come up with something different. And, that may be the tokenization through Project Agora. But any digital system that is operated by any entity that becomes conditional is no longer satisfies one of the basic fundamental definitions of money.
So I used to have a statement I used to use when I taught geographic information systems. If it's digital, it can be done. I need to change this now to if it's digital, it can be manipulated even easier.
Of course.
Is that correct?
Well, first of all, who's keeping track? Where's the ledger? How many people have audit the Fed? I thought they were going to go down and see how much gold that was down there. I'm still waiting. So I can go back to Ron Paul probably 30 years ago saying, hey, how much do we actually have down there? My clue is that there might be a big echo in that room. We don't know. And we're trading dollars that, have been created with fiscal policy. For any of you who want to take a look at recent U.S. history, we used to have a thing called the budget, which was done annually, and there were budget hearings, and state governments still basically do this. But now, federally, actually going back to the Obama administration, I believe, the new thing is we have continuing resolutions, 30 days, 60 days. The government's going to shut down every month. It seems like we're looking at another shutdown. It used to be annual. We used to do an annual budget, and you had to stay within the budget. There's no budget when it's 60 days. And at the end of the day, if the requirement to satisfy the budget means you have to create $1 trillion, where did that $1 trillion come from other than through monetary creation and dilution of the wealth that you hold? So there's a fundamental problem in terms of what we've got going on, and people are across the world are getting nervous holding U.S. dollars.
So
there's going to be something different.
I'm going to go back to what I said in the beginning. Gold has value because we've agreed upon it.
Mm-hmm.
Bitcoin holds a value because it's agreed upon between people.
That's a shaky one right now, but that's
all
all
right. Silver value is what we agree it is. All right, and we see that from
And there's an industrial use there, which is different.
All right.
But go ahead.
GDP. We agree that it's so. The full faith. Gold has value because we agree. We believe it does. GDP right now, the dollar has value as long as people believe in it. AI has the most power I've seen of anything come out to screw around with people's beliefs. I think it's worse than social media. But you put the AI within the social media, the internet context, if you can manipulate that and control, and the reason I say
The introduction
AI,
of doubt.
I say AI this reason, the automation part of it, because I can get on here. We're two guys. We're real, right? We're two real.
Yeah, I'm still here. Yeah.
Two real human beings. We are not AI generated, but we could be now. I can, and we talked about that other study that said you only need well less than 1/10 of 1% of the information out there. I could flood this thing if I wanted to, using the power of AI, and I could dramatically impact belief systems.
Absolutely. And
So that means we are at a major risk in our economic systems from this AI.
And let's take this one step further.
Especially the people who have saved. They're probably at the most. If you have nothing right now, you probably have no risk.
Or if you're in debt. I mean, at the end of the day, you know, it's
Well,
if the
yeah.
dollars are inflated to nothingness, your debts are paid off just the same way that it was during the Weimar Republic. But I think that we have to also look at, we've done a lot of talk about LLM, large language models, and it's the basis of ChatGPT. And I think that, you know, when we look at it most of the time, it's an exchange. It's like, hi, how are you? And it comes back and it gives you a response. And it's a well thought out response. Now let's extrapolate that out to a point to where now you task the large language model to spin a story that says dollar is bad. And
Which probably wouldn't be hard to do, because here, watch. I don't even have to do it. Watch this. Housing. Super valued. Can't even get any. Reminds me of 2008. New wave technology going to transform everything. Reminds me of 2000. Mass producing new money to prop up broken systems. Reminds me of the Weimar Republic. It's like every one of these damn things is happening at once. How hard is it going to be to create that fear if I'm an adversary of the United States at this point?
so we have the capability now, the technology is there now, to where an AI in the form of, and I mean, if they can write resumes, certainly it can write a dissertation about why the US dollar is a bad bet because of X, Y, and Z, all of the things that we just did, in a very convincing argument with a picture of someone there talking away who doesn't exist, and be able to undermine the faith, as we talked about, in the currency and the monetary system. I think one of the reasons that you're seeing the flocking to gold and silver, and it's not mom and dad or me or Will or anyone else that's going out that's driving these prices up. It's central banks who are looking at
Big buyers.
they're looking to get rid of the paper that they know has been printed on the fast lane, and they want to have something that they're going to be able to use to back up and maintain their power, because the central banks are looking to maintain power, and they're realizing, somebody's realizing on a massive scale, when you consider the fact that, you know, gold buying by the tons by governmental units has been taking place in the last few years. And you've seen the price of gold go from $1,500 to $5,000 in like a matter of a couple of years, as opposed to, what it took to get up. It's becoming, geometric in the direction that it's going to. We have to take a hard look.
For me, we've been stuck at basically the stagflation years. We've been stuck at that price for the entire Reagan and New Democrat era.
So now all of a sudden somebody, and I'm saying it, this is not John Q. Public going out and driving the gold market up, or for that matter, even the silver market up. Yeah, okay, they may go out and buy it, think they're going to make a couple bucks on it. But this isn't about somebody going out and buying 50 or 100 or 1,000 ounces. You take a look at central bank purchases of precious metals that's going on, and that's because people are looking to get out of the fiat currencies because they are conditional and because they are being inflated by governments who are trying to maintain control. That's why it's happening. Why? What do they know that we don't know? Now, when you put on top of that the ability for AI to be given something to react to, and we've done a lot of podcasts on how LLM, large language models, are able to take data and react to it and then create a narrative, as well as now a picture of someone speaking who is not someone at all, but just an image, to give a very convincing argument. And there's a bunch of them. If you go on Facebook right now, you can look at, views about Agora, about precious metals that could be promoted by people who are looking to undermine the faith and credit of the United States dollar as the reserve currency. This is not the future. This is now.
So there's two. I gave you my conspiracy theory, but equally conspiratorial theory is an adversary could use AI to undermine our currency. Mm-hmm. But our currency could be devalued because of the decisions of policymakers. Mm-hmm. And equally so, AI could be used to pump up our currency value.
Yeah, it's possible, but you're going to have a rough time convincing people that just paid $4 for a loaf of bread.
Well, I agree there is that reality moment, but with enough AI, we could convince people that this is the normal order of things because things have been going up since you bought your house for $13,000 or whatever.
$29,000. $13,000 would have been earlier.
So I go back to what I always say in all of these. Yeah, why is this big hurry with this AI? All right, you know how you're now putting at risk, and maybe when I was young, I would have thought this was cute. Everybody who did what they were told for years, stockpiled away their money, and is ready to go into retirement, could find out that they were rich yesterday and their money has no value tomorrow, even regardless of whatever they invested in.
And if you want to get really cynical about it, FDIC, which guarantees all your deposits, guarantees that it will pay you in the U.S. dollars whenever it is if the bank is insolvent, and I think it has years and years to do so, and it's going to give you U.S. dollars that are the same unit.
But my point is, we're playing with fire here again. Now we're playing with every aspect of our life, our love lives, our children's education, our jobs, our monetary system. How old is this thing? This large language model? What are we looking at?
10 years, maybe?
No, it's not 10.
Well, since it came out, but maybe the concept of it. But
that concept, like I said, I remember trying to work on this in the 80s, but this... And we're going to trust all these structures and systems to this thing we really know nothing about, that we have seen playing with lies, manipulates, can be manipulated by the programmer.
And for anybody who doesn't think that this type of thing...
if you're an environment lover, is going to need more power generated.
Global warming's not a big deal anymore.
This is nuts.
And we're seeing...
You might think we're nuts. I definitely always think when Ed gets on this monetary stuff, he might be nuts. But I'll tell you what's even nuttier than all this. Handing this over to a machine.
And if you don't think that this can be embarrassing, watch some poor slob who's at the checkout at the food store, and they put their card in, and it's rejected. It happens. Could be a credit limit. Could be it just didn't work. Oh, too bad. We are potentially allowing this type of power, the discretionary power over all of our finances, to the same genre as the AI unit that's going to come and say, Ed, I love you. I want to marry you.
And on that, we'll be back to this subject, I'm sure, at some point. It won't take as long. Thank you for bearing with us here. Leave us some comments about what you think. Watch right before the midterm and tell me that I was wrong, because I really want to be wrong.
And subscribe. And don't forget to check out part 1.
Subscriptions are free. Likes are free. The information is free. We're never going to try to sell you anything. We're just asking you, whether you agree with us or disagree with us, I don't care. Just think.
We are two guys against AI.